Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 25th, 2025, and we're diving into Aon's first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Aon has just released their Q1 2025 results, and there's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Aon reported a total revenue of $4.7 billion for the first quarter, marking a 16% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by a 5% organic revenue increase and contributions from their recent acquisition, NFP. The risk capital and human capital segments both showed strong performance, with human capital revenue surging by 40%.
And how about profitability?
Aon's adjusted operating income grew by 12%, reflecting their ability to manage costs effectively while expanding their business. However, the adjusted operating margin slightly decreased to 38.4% due to increased expenses and investments in long-term growth.
EPS performance and analyst expectations. Moving on to earnings per share, Aon reported an adjusted EPS of $5.67, which is below the analyst forecast of $6.04. John, what does this mean for investors?
While the adjusted EPS fell short of expectations, it's important to note that Aon has increased their quarterly dividend by 10%, marking the 15th consecutive year of dividend growth. This demonstrates their commitment to returning value to shareholders despite the EPS miss.
That's a good point. How should investors interpret this in terms of Aon's financial health?
The dividend increase is a positive signal, indicating confidence in their cash flow and future earnings potential. Investors should consider the broader context of Aon's strategic initiatives and market position.
Operational efficiencies and future outlook. Let's talk about operational efficiencies and future outlook. Aon's free cash flow decreased significantly to $84 million. What are the implications here, John?
The decrease in free cash flow is primarily due to higher payments related to incentive compensation and restructuring. However, Aon is on track to achieve their leverage objective of 2.83x by the end of 2025, which is a positive sign for their financial stability.
And what about their future outlook?
CEO Greg Case has reaffirmed their 2025 guidance, emphasizing mid-single-digit organic revenue growth and strong adjusted EPS growth. This reflects confidence in their business model and strategic direction.
Key takeaways. In summary, Aon has delivered strong revenue growth and continues to focus on strategic initiatives despite missing EPS expectations. Their commitment to shareholder returns through dividend increases is noteworthy. Thank you for joining us, John.
Thank you. Aon's performance this quarter shows resilience and strategic foresight, making it a company to watch closely.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Aon's performance in the comments below.